Hi everyone. Welcome back to AI Finance Buddy. Today, we're diving into a market that's sending mixed signals. Tech stocks are facing a sell-off ahead of Nvidia's earnings report, while energy stocks are riding high on rising oil prices. What's really driving these shifts? In this episode, we'll break down today's biggest market trends, including the top stock movers like Unilever and Tesla, and what their performances mean for your investments. We'll also explore the impact of inflation and trade tensions on market sentiment. Plus, we have an inspiring success story about Daniela and Mihai Vasila, who turned a modest €5,000 into €50,000 through smart investing. And before we wrap up, I'll share my personal investment strategy, the real trades I'm making today to navigate these turbulent waters. So stick around until the end, you won't want to miss it. Let's get started. Chapter 1, Today's Market News. Today, the market sentiment is mixed, with tech stocks facing a notable sell-off ahead of Nvidia's earnings report, which has investors on edge. The S&P 500 dipped 0.5%, primarily due to concerns over tech valuations and broader economic indicators. Meanwhile, energy stocks are buoyed by rising oil prices, while consumer staples show resilience amid inflation worries. Key factors influencing sentiment include upcoming economic data releases and ongoing trade tensions between the US and China. Now, let's look at the top 3 biggest stock movers. 1. Unilever, known for its diverse range of consumer goods, struggled today as it faces challenges selling its plant-based meat brand, The Vegetarian Butcher. With shifting consumer preferences leading to declining demand for meat alternatives, Unilever's stock fell 3%. Investors are concerned about the company's ability to adapt to changing market trends. Buy score, 60 out of 100. 2. Tesla's stock dropped 4% after a much-anticipated autopilot update in China left many owners disappointed. The update, which introduced new features, fell short of the advanced capabilities available in the US, leading to frustration among customers. As competition intensifies from local EV makers, investors are wary of Tesla's market position. Buy score, 65 out of 100. 3. Berkshire Hathaway shares surged 4% to a record high after reporting its strongest quarterly profit ever, driven by robust performance in its insurance division. With a cash reserve of $334 billion, the company is well positioned for future investments. This strong financial health reassures investors about its long-term stability. Buy score, 75 out of 100. Today's market activity highlights the volatility in tech stocks, particularly as investors await critical earnings reports. The mixed performance across sectors suggests a cautious approach, especially in tech. Keep an eye on upcoming economic data releases and Nvidia's earnings, as these could significantly influence market direction. Remember, staying informed and adaptable is key in navigating these turbulent waters. Chapter 2, Simple Finance Terms Explained. Asset. An asset is anything valuable you own, like cash, stocks, or even your bike. Think of it as your treasure chest, whatever you can sell or use that has worth. Momentum. Momentum is the idea that if a stock is rising, it might keep climbing, just like a snowball rolling downhill gets bigger and faster. If it's falling, it could keep tumbling down, too. Bear market. A bear market happens when stock prices are dropping and people feel gloomy about the economy, like a bear swiping down everything in its path. It's a time when investors are feeling a bit grumpy. Chapter 3, Top Stock Pick of the Day. Today, let's talk about why Alphabet Incorporated, Google, the parent company of Google, is a great investment choice right now. First off, Google is a big player in digital advertising and technology. They own popular services like Google Search, YouTube, and Google Cloud. This means they have a strong and diverse business that can keep growing. Financially, Google looks solid. They have very little debt, which means they're not over-leveraged, and they can easily pay off any interest on their loans. Their earnings show they're making good profits and generating healthy cash flow, which is great for future growth. Looking ahead, Google is well positioned to benefit from trends in digital advertising and cloud services, making it a promising pick for the next year or so. However, it's important to keep in mind that there are some risks. Changes in regulations, competition in the tech space, or shifts in the economy could impact Google's performance. So, while it looks good now, always stay informed about the bigger picture. In short, Google is a strong choice for those looking to invest in a tech leader with great growth potential. Chapter 4, Core Long-Term Strategy with ETF. Imagine you want to invest in a whole garden of flowers, but you only have a small pot. That's where ETFs, or exchange-traded funds, come in. They're like a pot that holds a variety of stocks, allowing you to invest in many companies at once, which is great for long-term growth. Now, think of the MSCI World Index as a map of that garden. It represents thousands of companies from 23 countries, helping you spread your investment across the globe. This way, if one flower wilts, others can still bloom, giving you a better chance for a flourishing investment. Let's dive into some recent news about the MSCI World Index and its parent company, MSCI Incorporated. First up, there's a part of the MSCI World Index that focuses specifically on technology companies. This index helps investors track how tech stocks are performing globally, so if you're eyeing tech investments, it's a good idea to keep an eye on this index. Now, MSCI Incorporated has seen some interesting activity. World Equity Group recently boosted their investment in MSCI by over 100%. This shows confidence in the company's potential, which can be a positive sign for other investors. However, it's not all smooth sailing. MSCI reported a significant drop in profits due to increased costs, like employee bonuses. So, while there's excitement around tech and MSCI's growth, it's wise to stay aware of the challenges too. Remember, investing can be risky. Stay patient and only use money you won't need soon. Chapter 5, Quick Financial Lesson. When it comes to managing your money, you might wonder whether to choose a credit union or a bank. Both offer similar services, but they have some key differences. Credit unions are not-for-profit organizations owned by their members. This means they often have lower fees and better interest rates. For example, if you deposit $1,000 in a credit union savings account, you might earn more interest than at a bank. Plus, credit unions tend to offer a more personal touch, like knowing your name when you walk in. On the other hand, banks are for-profit businesses. They may have more branches and ATMs, but they often charge higher fees and offer lower interest rates. Imagine you're at a coffee shop. A credit union is like your friendly neighborhood cafe, where the barista remembers your favorite drink. A bank is more like a big chain coffee shop, efficient but less personal. So, when choosing where to keep your money, think about what matters most to you: lower fees and personal service, or convenience and a wider network. As a tip, consider visiting a few local credit unions to see if they fit your needs. You might be pleasantly surprised. Chapter 6, Real Stories of Financial Success. In the heart of Bucharest, Romania, Daniela and Mihai Vasila embarked on their financial journey in 2015. With a modest savings of €5,000, they decided to invest in a mix of stocks and mutual funds, focusing on technology and renewable energy sectors. They chose ETFs like the iShares Global Clean Energy ETF and stocks from companies like UiPath, which was gaining traction in the tech world. Over the next 5 years, their disciplined approach and consistent contributions grew their portfolio to an impressive €50,000 by 2020. They learned the importance of diversification and staying informed about market trends, which helped them navigate the ups and downs of investing. Daniela and Mihai's story teaches us that with patience, research, and a clear strategy, anyone can build wealth. Remember, it's not about how much you start with, but how you grow it. Start your journey today. Chapter 7, Summary and Personal Investment Strategy. Thank you for joining us today. Let's quickly recap what we covered in this video. In Chapter 1, we explored a mixed market sentiment, with tech stocks facing pressure ahead of Nvidia's earnings, while energy stocks thrived on rising oil prices. Key movers included Unilever, Tesla, and Berkshire Hathaway, highlighting the volatility and opportunities in today's market. In Chapter 2, we defined essential finance terms. An asset is anything valuable you own. Momentum refers to the trend of stock prices, and a bear market indicates a decline in stock prices and investor sentiment. Understanding these terms is crucial for navigating the financial landscape. In Chapter 3, today's standout stock is Google. With its strong position in digital advertising and solid financials, it presents a promising investment opportunity, despite some risks in the tech sector. Keeping an eye on regulatory changes and competition is essential. In Chapter 4, we discussed how ETFs allow you to invest in a diverse range of stocks, like a garden of flowers in a single pot. The MSCI World Index helps you track global performance, making it a smart choice for long-term growth, while also reminding us to stay aware of potential challenges. In Chapter 5, we compared credit unions and banks, highlighting that credit unions often offer lower fees and better interest rates, while banks provide more convenience. Choosing the right option depends on your personal preferences and financial goals. In Chapter 6, we shared the inspiring story of Daniela and Mihai Vasila, who grew their €5,000 investment to €50,000 through smart investing and diversification. Their journey shows that with patience and strategy, anyone can build wealth. For today, I am adding $15 to my MSCI World Index investment and experimenting with $10 in a fractional share of our suggested best buy pick, Google, both with 1-to-1 leverage to demonstrate the importance of cautious and diversified investing. Before we wrap up, let's bust a common financial myth: the best way to make money is to work harder. The truth is, smart money management and investing are more effective than just working more hours. For example, someone investing wisely can achieve financial independence earlier than a high-income earner who doesn't invest. Wealth comes from how you manage money, not just how hard you work. As a daily finance challenge, find an expense you can cut by 10% this month and apply it to your savings. Take a few minutes today to complete this challenge and share your thoughts in the comments. Small steps lead to big financial success. As always, remember to do your own research, test strategies, and consult a financial advisor before making any financial decisions. If you enjoyed today's video, please like, comment, subscribe, and turn on notifications to stay informed and support our channel's growth. Join us for the next episode, where we'll continue building your financial knowledge. We'd love to hear your thoughts, questions, or topic suggestions in the comments. Enabling notifications ensures you never miss valuable financial insights and market updates. Thank you for watching, and see you next time.